We've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Dietrich, get that chart out there. How are you, buddy?
Hey guys, thanks for having me. Doing well. You know, I just traveled this week. I had to literally settle this up in the last 5 minutes, so I was a little scurried. But as long as you can hear and see me, I guess I did it correctly. So we're all good.
You look great, bro. You look great. I was actually just talking about Cincinnati yesterday, believe it or not.
Was it with Joe Burrow restructuring his contract, making some money for us? We'll
I was just saying I wanted to go to a Reds game.
Oh, that's right. Hey, come on down. Come on down. You know, sorry I couldn't make it last week. My daughter graduated, and I know you guys were in Nashville. It's not far from me. I wish I could have made it, but it was a busy week in the Dietrich household last week. So congrats to all those graduates. JC, you'll get there. You know, it's stressful. Those graduation parties are stressful. I'm just recovering after a week, I think. So yeah.
Got it. Who was partying more, you or the graduates?
Oh, the graduates. Yeah, when you're the host, you're running around trying to make sure everybody's happy. So I don't need to get too into this, but we ordered a food truck, you know, just tacos.
Good idea.
Party starts at 5. They're supposed to be there like at 2. You're busy about 4 o'clock. I'm like, where's my food truck? I start calling them, and they're like, oh yeah, we had an accident. We probably can't make it. I'm like, you probably could have let me know that. So anyway, a little panic, but they eventually showed up. They literally rented a U-Haul and showed up in a U-Haul with all the food. It all worked out, but it was stressful. But it was it was fun. But it's glad to be back. I appreciate it. I know you're going to hopefully come on Facts versus Feelings soon enough, which will be great. So this is great. Thank you.
I had Dietrich and Sonu just double teaming me on my text messages, getting me on getting me on the old calendar. I appreciate you guys.
Yeah, we appreciate you. You know, I'll just jump in. I mean, I love to talk what you guys just talked about. 60-40 dead, 60-40 not. You know, one of the themes we've talked a lot about at Carson, like so everybody hopefully knows Sonu Varghese, chief macro strategist, the macro stuff. So I'll talk about that for a second. We've been saying all year, this year and even a little further, that, you know, diversify your diversifiers. And I get it. I'm not a short-term trader. I'm not someone who's going to tell you next week this is going to happen. A little bigger picture. We manage over $8 billion. Carson Group, $60 billion total. We've been growing really fast. And one thing we've been saying is diversify your diversifiers, because it used to be stocks and bonds. Okay, stocks go down, bonds go up, and give you a little diversification. That's not been the case at all. You've got that great chart you've been sharing. 2022 reminded us all of that, or showed us all that they don't always act like they're supposed to. But that's the world we're living in, right? We're in an inflationary growth environment. In a world of inflationary growth, we've been saying there's probably no Fed cuts. Everyone agrees now. But what Sonu's been saying, we position our portfolios. We have some managed futures. Now I know gold's obviously not done as well. We added gold back in March of 2023, which has been a real nice alpha generator for the models we do run. But some gold, some cash, some managed futures, shorter term duration. You know, everybody, you know, I mean, longer. You know, one of the things I love, that people talk a lot about is, listen, we have a lot of debt, right? We have a lot of debt, you know, 30, whatever trillion, however much it is, it goes up every day. Where's the blow up going to be? Are we going to have a blow up? And you could argue we've already had it. If you have longer term bonds and you've owned longer term bonds the last 5 years, how are you doing? You're down a lot. They have not done anything for you. So yeah, the stock market's hung in there, and we'll have to pay the piper someday for all this leverage and all this debt. I don't know. Maybe not. You know, I mean, I heard that for about 30 years now.
I've been hearing my whole career. Number keeps going up.
Reality,
stock market.
If you're a long-term bond guy, though, it has been a struggle. I mean, that's a reality. Maybe that's where we're paying the piper with all these higher yields and all this stuff, because it's been hurting fixed income. But diversifiers, we still think it makes sense not to have a ton of bonds in there, but to have some other stuff in that 40% from a traditional 60-40, which I know probably no listeners are, but that's kind of how we talk when we talk big picture.
I love how, you know, on the day of the biggest IPO of all time by a long shot, we're coming in here talking about bonds. I mean, this is real life.
I didn't expect that, but it's just what happens.
This is real life. All right. Yeah. So Straza doesn't think today's a big deal. It's just another day for him. I am usually the first one to say this is stupid, ignore it. You know, it's not a big deal, but I think it is a big deal. I mean, it's the biggest deal of all time by like a factor of 20. I mean, like, right? Like, it's not even close, right?
Right.
So, you know, depending on where this thing opens up, could be 2 trillion, could be 3 trillion. We could be waking up tomorrow morning and this thing's 10% of US GDP on the first day. I mean, like, that's real life. Yeah. And I just don't, you know, I don't think that that's nothing. I would be lying to you and everybody here in the community if I told you guys that it doesn't matter and I'm ignoring it. You know, it's a big deal. What do you think?
Yeah. Yeah, I mean, as someone who works with financial advisors all over the country and their clients, this is a big deal to them, right? People are really, really interested in what's happening. How can I get some shares? When's it going to come out? All these different things. And we've all talked about it, and you guys have talked about it. I mean, the reality, look at all the big IPOs the last 20 years. I mean, within that first year, most of them get cut in half. Now, I'm not saying this one's going to do that, but I mean that's kind of something to be very, very aware of. And the cool work that Jay Ritter, the professor, I think call him Dr. IPO, better than being called Dr. Do, right? Dr. IPO down at the University of Florida. He looked at 9,200 IPOs going back to 1980. The first day pop on average is about 18 or 19%. Oh, that's pretty good. Well, the next 3 years, those stocks gained about 19%. So literally the first day is all the gains, and they really underperform longer term. These are just some things to think about. The truth is this one's big. We know bigger ones are coming. We know what Google just did and what Meta is going to do. There's still a lot of equity, a lot of supply coming out there. I think the market will be able to absorb it. I mean, and as you guys have talked all about, I'm sure the last week or so, there's rotation out of some of the high flying momentum names after semiconductors gained 70% in 2 months and all the stuff that's going on. Then you look under the surface and advanced decline lines are doing just fine over the last 2 weeks. Number of stocks above their 20-day, 50-day, 200-day. That stuff's been well above the little line of lull we have in the middle of May there. There's still some underlying strength, and as people who manage money, I mean, I go on TV a lot, right? I have a face for radio, by the way, apparently. So they keep bringing me out there. But the truth is, everyone's large cap tech, and it's been struggling a little bit lately. Yes, after the rally we had, I think it's normal. But then you look at it's a lot of opportunity. There's still a lot of stuff going higher, and it doesn't seem like people are talking about it all because we're all talking about SpaceX, which I get why, but there's still some positives out there, I think, in our view.
I've been thinking about this a lot because I know the history. US Steel goes out in 1901, stock market gets cut in half. RCA goes out in 1919, stock market gets cut in half. Ford goes out in 56, peaks on the first day, Dow enters a bear market. Facebook disaster, peaks on the first day, falls 60%. Coinbase falls 90%. Bitcoin peaks that day. Uber, Rivian, just go one by one, right? All disasters. Ever since Blackstone in 2007, not only did it lose 90%, but it kicked off the great financial crisis, right? Talk about a good opening party. So, that's the context. Now, what I'm noticing is that everybody seems to know this already as well, right?
Yeah,
Barron's too big to buy. That's aggressive. Right. SpaceX IPO looks way too expensive. So the journalists, right, they think that it's too big and that it looks way too expensive. So that's probably a good thing. Next chart. Then you got this gay guy, SpaceX set to make Elon Musk the first trillionaire. Here's how to properly hate him. This is a Canadian angry man named Chris Gay. So that's interesting. And then finally, looking at individual investors, you got half of them are bearish equities over the next 6 months. And you got the lowest bullish readings that we've seen all year going into this IPO. So from a sentiment standpoint, I just don't think that there's like over exuberance going into this IPO. It's more like everything I just said and laid out, everybody knows and is expecting the same thing, maybe. I don't know.
Well, what's everyone been saying on TV for the last 2 weeks? The same stuff you just said. That listen, this is a potential worry. So I'm going to dust off the history books for some of us here. Well, some of us were around then. There's a little company called Google that had an IPO in 2004. And I was working at an option shop at the time. And I just remember the negative sentiment that we saw on Google. People hated Google. I mean, I know it sounds crazy now, but go back and look. I was just looking at some old, dusting off some things. I shared it on X the other day. The reality was there's one article written that said, why would someone buy a stock that never goes up? The stock wasn't even publicly traded yet, JC. They were talking about Google this way.
Go to slide 15. Just throw it up so people can get some perspective.
Oh, you have it there? Okay.
That was early in my career.
So it's just unbelievable that the hatred that on this one. I remember we bought a bunch of calls on it. It really worked well because the stock went up a whole bunch in the beginning. Had a little.
You already in the business in 2004, Ryan?
Yeah, I worked at Schaefer's Investment Research. I was there.
How old
am I? I'm 47. I'll be 48.
You're 3 years older than me. All right. I thought you were younger than
wiser.
me.
Yeah, well, I guess not. I don't know. I'm not. But no, I've been in it for a while, and listen, all these things are different. But that was a really big IPO that was just panned and hated even before it even came out.
It was a
And
Dutch
that
auction,
negativity,
remember?
yes, exactly. That negativity unwound, and then you see that huge spike initially off the IPO. So that's in the back of my mind here. With what's going on, but I'm with you. When I get to travel the country, talk to advisors, do industry events, talk to clients, it's not like there's a lot of excitement out there. I mean, yes, there's a couple people that follow some of these tech names and things that are excited, but most individual investors are still really worried. And I know that's the AAII sentiment. You shared that. And it's, you could argue it's a small sample size. It's the same people. I don't want to get into all that. What I like over the last, let's call it week, since we've obviously had the big Friday drop last Friday, put the call ratios finally spiked, right? I mean, we've seen some decent amount of fear coming in. I know CNN fear and greed. We can pick holes in it all you want.
That thing sucks.
It does, but I mean, I'll tell you what, I like seeing the factor fearful right now. I mean, I'll just put it that way. Like, I mean, I'd rather be fearful now than not.
Yeah,
so
but
there
look
are
at
some
the inputs. The inputs are like ridiculous. Most of those inputs are trend following inputs.
Yeah, you're right. They are. But then the one that gets me, red, white, and blue. I think it was New Yorker with George Washington all beat up, kind of hung over at the bar. And
he was
that's
smoking
kind of
cigarettes, right?
Yeah. I mean, that's the vibe that we're still feeling, even though we're not that far from an all-time high on equities. A little bit off, but globally, what's happening globally? Those are still ripping for the most part. So those are some fascinating things. I mean, listen, Carson, I know people probably know this. I mean, we've been pretty bullish, right? 3 years ago, I know you were in that camp too, and we were saying, listen, it's not going to be a recession. It's not going to be as bad as they're telling us. Everybody hated that call. Fortunately, it's worked out. We haven't changed our tune. I mean, one that listeners might like. So this bull market, maybe you guys talked about it, but I'll point it out. Just 2 weeks ago, is 3.6 years old. Okay, what in the world is that? I get what everyone's thinking. Bull markets, yes, I'm using definition of down 20. This stuff isn't perfect, but still, this is just good context around this. This bull market now is older than the 1960s bull market, putting it as the 8th longest bull market since World War II. Okay, what's that mean? Well, the previous 7 before this one, 6 of them made it to at least their 5th year, and the average was like 8 years. I'm not saying this is going to go 8 years, but we've been saying for a long time this bull market's probably younger than you think. And then these washouts, and I know we call it a rolling bear market. We see these different sectors. Obviously, software got blown up, and all these other different groups get blown up along the way. And I like to see that because that's good for the market to refresh the fear. But the truth, again, is this equity bull market that we've been in for a while, in our opinion, is probably still alive and well. We came into this year with a 15% target. No, I don't like giving targets. Sometimes you have to as a strategist when you go on TV and do that stuff. We manage real money. Think about a 60-40 portfolio. Our unconstrained models, we're about 69% equities, 31% other stuff. No, it's not all just bonds. Like I said, there's some gold, there's some cash, there's some managed futures in there, some shorter term bonds and some different things, with some commodity exposure as well. But the reality is we don't think this is over. We manage real money. I get paid by how the real money does, and we're still in that camp, JC. We've been there for a long time. We're still there.
Do you think we get rotation into some of these areas? You're starting to see the advanced decline line making some move because of some rotation into like financials, healthcare, maybe industrials. For me, I've been in the camp that it's not a want that this market needs some rotation. It's more of a need. Yep. Right? You got to see some rotation, just like you need to see some rotation into tech a few months ago after it underperformed for 6 months. You need to see it, and boy, did you see it, right? Are you in the camp that are you in a similar camp as me that you got to see some of that rotation?
We think so, and it's funny about tech because 3 months ago, we had a slight overweight to tech. I mean, Dan Ives was getting just obliterated, everywhere he went. And by the way, big fan of Dan, but that was the vibes. Oh, look at these stocks; they're doing so bad and so poorly. And we were talking internally at Carson, like Soda and I and the team were like, if we're going to get to when we were down like 5% for the year, you look up, it's like our target's 15 again, like targets, but still you're down 5. You're like, are we really going to get all the way up to there? And we said, we probably need tech to come back. Well, then we had the 6 Sigma events, what we just saw, 600 deviation, outperformance, 50 days off those lows. So everybody knows, maybe you know this, 6 standard deviation events are supposed to happen once every 4 million years. We just had one. We had about a 6.5
a week.
Yeah, we had a 6.5 standard deviation when we had oil double overnight. That one was out of like 5 million years. So yes, that's how the markets work if you're new to this. But still, the reality is these are some unique situations that we're seeing that are kind of just literally not supposed to happen. but they do happen. And then you get to the whole idea, what you asked me about rotation. Yes, I mean, when you talk about tech, what it has just done and all this stuff, it probably needed a break, and that's what we're seeing. It might not be over, but again, when I look at I mean, we like industrials a lot. I mean, that group is nice, and I believe SpaceX is going to be an industrial. Is that official yet? I'm not sure. I think they're going to go to industrial.
It's got to be. They can't put all these things in tech, obviously.
Right. Yeah, and that's what we call it
industrial or communications.
Yeah, well, probably industrial is what I've seen. I guess if it's out, let us know. But the truth is, it's kind of tech adjacent, which is about half of the market.
I was going to say, what is it?
Yeah, but then again, you think about the other one, and I've shared this. I know you've shared it when I've shared it.
Uber's an industrial stock.
Yeah, that's true. Oh, Uber. I love Uber. I took an Uber a couple of weeks ago from O'Hare. I was supposed to get to Iowa. Couldn't get to Iowa because my flight was all screwed up. I was doing a thing with the Carson advisor over there. And I walk outside and I just said, how much is an Uber? All right, it's going to be like a 4-hour ride. I push a button. Within 7 minutes, a guy shows up for $340. I didn't think that was that bad of a deal. I took a 4-hour Uber from O'Hare to Des Moines, Iowa to do an event. And you think about like productivity, because everyone's I don't know how you measure something like that, JC. I would have missed that event. And instead I just slept in an Uber for 4 hours and I still got where I had to go. So I don't know if you call that industrial or not, whatever that is, but that's my Uber story for the day there. What was it good now? Oh yeah, rotation. So yes, if you think about this economy, we don't see a recession. I know this is more a charts story, but Soda's been saying for a while the underlying opinions of the labor market are improving. 500,000 jobs last 3 months. That's probably a good thing. Consumer strong. The AI has the GDP the last 5 quarters. I'm having people talk about GDP on here, but I will for a second. Don't shoot me. About 2%. Okay, is that what GDP's average last 5 quarters? Half of that has come from AI capex. We get it. We've seen all that stuff. We don't want that to continue. We want other parts of the economy to come back. So I think the consumer is going to do well. What does that mean? Financials, industrials, those cyclical areas that have underperformed, we think are going to do pretty well. And when you're down 5% and you look all the way up, you think you're going to go to 15% and you need the tech to come back. Well, that's happened. Wouldn't be shocked if tech does well or still does okay the rest of this year. But it is what it is. These markets rotate, and I think that's going to be a positive, and that's how we're positioning things here.
Straza making a good point that the vast majority of the revenues comes from communications, Starlink, but also you can argue that is one of the few business lines that is actually intended to generate revenues, and they got so much other things going on. So I don't necessarily know that revenues is important to them at all. But yeah, so Starlink, I have a Starlink. I love it. It's why I think it could be considered a communication stock. I think it won't. I think it will be industrial, and then they'll probably throw OpenAI maybe or Anthropic into communications, and none of them will be tech.
Yeah. One thing about Starlink, I literally, so with Cincinnati, I can pick which airline I want. We're kind of free agents. It's not like this is the airline at our airport. So there's Delta, United, and American. Anymore, I fly United if I can because they have Starlink, and it is that good. So if you haven't used it yet and it's new to you, I mean, it's like I'm on a plane and the internet is better on a plane than it's in my house because Starlink is that good. And when you see stuff like that, and you see how many, I think, 10 million people use Starlink, they call it. Is that all it is? Or 10 million subscribers, probably. It's not a lot. I mean, there's a lot more coming. I mean, it's going to be a lot more. So there's so much potential with this stuff when these airlines, everybody start using it that. Yeah, I get it. I mean, that's why this company is valued where it is, and the worries are real, but there are some still things that are positive. And you brought up a great point. This isn't the only big IPO coming out. We all know this, right? There's other big ones coming out. So we have to kind of move the deck around a little bit and get ready to add some of these to some of the large ETFs and all the different things that happen with this potential fall off from these big ETFs.
I think that they're all watching, and there's a lot of pressure on the NASDAQ to get this right. And I think Straza made a good point saying that if this goes well, and it could be a gap and go, if this goes well, these things are coming right behind it, right? So I think that increases the likelihood of this going well and them screwing up the other ones and the other ones being a little more toppy. I'm generally, you got Barron's telling you that it's expensive and too much and too big, and then the gay guy last night from Canada really upset. And the AAII and just like in general, I'm not seeing that euphoria. So I actually think there's a real chance that this thing could open up somewhere between $3 and $4 trillion in the first tick. Like that is real. That is real. There's also a possibility that they screw it all up and it doesn't open at all. right? So I think there's a wide dispersion of potential returns. By the way, speaking of sentiment, throw up that slide 1 there. This is what Ryan was talking about earlier. George Washington there drinking a dirty martini, eating a birthday cake, and smoking too many cigarettes. Just got all those cigarette butts in there. Just classic. Shout out to George Washington. So I'm just not seeing the euphoria, which leads me to believe that there's a pretty good chance this thing goes to $3-4 trillion, which would represent 10-12% of US GDP on the first day. Holy shit. Holy shit.
Well, that's incredible. And then you talk about the sentiment. I mean, yes, their polls, the Michigan consumer confidence, lowest level we've seen in history. You talked about it, everybody's talked about it, but I'm with you. I mean, when do markets peak? When everybody's excited, having fun. I mean, this bull markets are supposed to be fun. I mean, I met you back in the summer of 2012. I remember in New York. I was in New York. A quick story, everybody. I go to New York. I was running around doing media stuff. I was using social media then, and this guy reached out like with a DM and said, "Hey, you want to go to lunch with me?" This is kind of before you did stuff like this. And I told my wife, some guy said my wife said, "Don't go." I was like, he said he'll probably buy, I'll go. And it was JC. And I remember we ate down there. Where do we eat? That Cobblestone Road? What's that called?
Stone Street.
Stone Street. You took me to Stone Street, been buddies ever since. But I remember the summer of 2012 because we were pretty bullish then at the shop I was at, and nobody else was. We had about a 7% pullback June of 2012. I know I sound old. Go look it up. Everybody was freaking out then. It just feels like this whole time everybody freaks out on these modest pullbacks. As long as we keep seeing that, I like it. That's good. I mean, we've got a 9.1% peak to trough correction on the S&P. I get it. Median stock might have done this. Certain sectors did that. I understand all these things. Your average midterm year, 17.5%. But just remember, 1 year off those lows, we've never been lower of 32% on average. I wouldn't be shocked if 9.1% peak to trough correction is the biggest peak to trough correction we'll have this year, which history to repeat itself often rhymes. Mark Twain. That means we're up over 30% on average since the end of end of March when the lows were. I don't know if we're going to be up that much, but we're off to a pretty darn good start off those lows. One more. We're up 19.5% in 2 months, rolling 42-day returns. 42-day returns, that's 2 months when you look at markets. All right, 19.5%. JC, that's only happened 7 other times in history, being up that much in 2 months. You got
and historically, it's very bearish, right?
Oh, well, yeah, that's what I'm about to lay out here. Not so much. 1975 is in there. You got 2009 in there. 2020 is in there. I think 91 is in there. 98 is in there. And then last year, 2025. 1 year off those lows, okay? Or I'm sorry, 1 year after a great 2 months like that, which, again, we just had recently. Only sample size of 7. You can shoot the messenger. You had small sample size. If there were more, I'd give it to you. Never lower out of those 7 instances a year later. Never lower 6 months later out of those 7 instances, and never lower 3 months later out of those 7 instances. Yeah, maybe we consolidate a little, but history would say you're probably going to keep going up when you have a blast of strength. Now, I'll ask you one. How's this? Because what everybody points out to me, and I don't disagree, those other times were like bear markets, okay? And then we rallied. This one was only, air quotes, only 9%, and we've rallied like that. Should we look at this differently because we're not starting from like a bear market here, you think?
I've been thinking about it a lot. The 2-month rate of change in technology, is something that we haven't seen in 25 years that happened at the lows of post dot-com bubble. These are not the types, these initiation thrusts, if you will, these momentum thrusts don't tend to happen at all-time highs. They tend to be off of key lows, maybe something like April of 25, maybe something like spring of 2020, March of 2009. You get these ridiculous numbers, right? And we're getting them at all-time highs in a lot of these cases, not just in technology, but you're seeing it in South Korea, you're seeing it in semiconductors, and you're seeing it just in different spots, which is fascinating to me. So I wonder, is this time different? Is this time actually evidence of exhaustion rather than the initiation that, historically this means? The good news is I don't know. And neither does Ryan Dietrich, and neither does anybody else in the chat, and neither does Stanley Druckenmiller or Warren Buffett or Paul Tudor Jones, and they don't know. They don't know. None of us know. And that's really comforting, actually, to be able to admit that I have no idea. We got to take the data that we have and, put the probabilities on our side and make the best decisions we can based on our personal objectives and risk tolerance and time horizons, right? And it's different for everybody. So for me, what am I I bought a space stock 2 days ago. I mean, I bought a bank this week. I bought a healthcare stock this week, a big healthcare stock this week. That's what I'm doing, right? I probably won't buy SpaceX today.
Yeah.
I can virtually guarantee I won't buy SpaceX today. Maybe, you never know. Uh, but I am. I'm in a space stock, so I guess I'm indirectly in. I don't know.
Mhm.
You know,
Well, maybe at the next Knicks home game, whatever that is, we could have Taylor Swift turn around and ask Paul Tudor Jones what he's doing.
dude,
If
how
he can.
funny was it watching PTJ just staring at Taylor Swift shaking her little ass?
Yeah,
Right? That
that
was
was
funny, right?
that was something.
That's
That
why
was
you pay
funny.
for those seats, you know.
Yeah. Oh boy. Yeah. I don't know.
Remember
That's
that
a little
idiot
like.
that said he never met a rich technician?
Oh
Right?
yeah.
Remember that guy?
Yeah.
Whatever happened to
We've
that
been
guy?
hearing that. Yeah, we've been hearing that. So I do have a CMT, obviously JC. I was the 499th chartered market technician.
Were
I got
you?
my target market. Yeah, I think it was 2004, 2003 or
Wow, I
2004.
was like 900 something.
Yeah, so I was 490. Almost 500. But for my entire career, I've been kind of. I think it has changed a lot in the last, maybe we'll call it 5 years off of COVID. But just the vibe when you used to say you look at charts, people thought you were crazy. Now that people realize, you know what, some of this stuff works when you kind of mold it together. And I have to talk the game, right? I do all this stuff. I mean, I'm a technician at heart. I can use the F word, the Fed. I can talk about all that other stuff because people like to hear it. End of the day, supply and demand and sentiment. Here's where I want to go with the question I asked you. Off of the 18.9% peak trough correction around Liberation Day. Yeah, 19%. We've had bigger, obviously, bear markets, but sentiment was about as negative as I've ever seen. I mean, April of 25, I was hearing from people that I graduated high school with, 20 something years ago, that I had heard from 20 years, and they're telling me, wow, what he's doing, he being Trump, what he's doing is the worst thing I've ever seen. He's going to wreck the economy. And I'm like, if I'm hearing from this person, do you think the market has it priced in? Of course, the market had it priced in. We know that. That's how these markets work. But it's just incredible the amount of fear, even on the 9% or just earlier this year. I mean, we saw various things that were saying this is some of the most fear and worst people have felt ever. And it is so much about politics. Maybe it's some social media. Maybe it's different things. I don't know. Maybe it's a combination of all this stuff. But as market participants, it's our job. Like I said, I'm a steward of assets, right? I mean, my job is literally to look at the data without having any preconceived notions on what it should do, and we follow it and we use it. We do the best we can to help people reach their long-term investment goals and invest in all these different things. And it's been a fun ride because literally every time the market goes down, I get slammed. I mean, just the other day, market was down a little bit. People are just killing me. I'm like, they know I'm kind of bullish, right? I still am. But it's like I've done this a while. I can take it. It's like that's probably a good sign. When this guy just popped up out of nowhere and he's slamming me because we had one bad day. Friday was a bad day. One more thing on Friday. So down 2.6% a week ago. Really rough day. Hey, listen, we had a heck of a run. We knew it was going to happen eventually. So JC, I found 22 years that gained at least 20% on the year. So really good years. The worst day on average during those best years for the S&P was down 3.5%. All right, so down 3.5% is the worst day during the best years. There was a day in 1997, I think it was September, down 7% in one day. All right. Still gained 31% for the year. Could you imagine if we had a 7% drop right now? Just how crazy that would be for everybody. And I don't think it's going to happen, but hey, who knows? But again, even your best years have a couple bad days.
You're
So
looking at what, about
oh,
4,000 Dow points or so?
Oh boy, wouldn't that shake stuff up?
3,500,
Yeah.
4,000 Dow points. Throw up slide one there, Spencer, please. This is we'll end it here, but it's a good reminder to observe, right? So this is in April of 2025, the age of chaos. You got your bald eagle, wrapped in bandages. I mean, very, very creative. As it turns out, the next 6 months were literally the least chaotic period in the history of the U.S. stock market. So when
the Dow went up 10 in a row, right? The Dow went up 10 months in a row after that.
Dude,
go figure.
These angry Brits are such a great contrarian indicator. And I remember it wasn't just angry Brits. Not that Straza was angry. Straza was buying stocks too. But I was in Fort Lauderdale with my family, and I'm in the hotel just doing some work. My family's down at the beach, and I was going to go meet him, and I'm on the phone with Straza. And I had kind of went, when I go on vacation, I go MIA off Twitter. I just kind of, I still write my daily notes and everything like that, but I'm just like off social media. And Straza's like, bro, you need to come back. People are getting worried. People think that you just left. They think that you left the business and you just disappeared and you're checked out. You really got to come back. right?
Oh, boy.
And so I'm like on the 50th floor or some hotel, you know, at the Four Seasons or the Ritz or wherever I was in Fort Lauderdale. It was one of the two. They're right next to each other. And so my family's downstairs. I swear to God, I tell Straz, I'm like, I'll be back next week. Tell everybody to relax. All right.
Yeah.
By the time I went in the elevator, walked across the street to the beach, and joined my family and just checked my phone, like the NASDAQ was up like 7%. That like in just that period of time between the hotel room and walking down to the beach. And my wife had already ordered a bottle of champagne for me. It was waiting for me. It was lovely. I poured myself a glass. I checked the market. I'm like, holy shit.
Yeah.
So that's a true story. Yeah.
No, that's funny. I know we're at the end. Quick one. So our buddies at The Economist, and you guys I'm sure shared this, the coming jobs apocalypse, with people falling into the abyss about how bad the economy is, about the jobs market is, and then you look at some of the macro data that Soto looks at, and the jobs market actually is improving. And again, that'll probably be another positive for bulls second half of this year, because our buddies at The Economist tend to be wrong more often than not.
Thank God.
Yeah.
By the way, if these angry Brits eventually go out of business, we should start a GoFundMe account and make sure that they remain employed so that we can get the data. And I've talked about this for a long time, and I know that there's some people that'll help me. I know Ryan Dietrich will be there helping me, and you know, Jason Shapiro will be in there helping me in macro charts to keep these folks in business, keep journalists employed.
And on that note, Ryan Dietrich, thank you so much. Always a pleasure.
Ryan, you're the man. Come back sooner.
Yeah,
you don't come on the show enough. Spencer, it's your fault.
I appreciate it. Thank you.
Right. Hey, before we go, I want to bring on Larry Thompson. He sent over a few charts. He sent over I like what he's looking at some S&P equal weight, some transport, some
what else is
aerospace and defense. Yeah. Let's bring out Larry. Let's talk about these charts and then we'll get out of here.